Crude oil futures are trading slightly lower late Monday after clawing back most of its earlier losses. Prices slipped on the opening as the positive impact from COVID-19 vaccine news and an OPEC deal on oil production cuts was undermined by surging coronavirus cases and heightened tensions between the United States and China. Most of California was put under a strict new lockdown as the number of new coronavirus cases continued to surge. The new stay-at-home order will be in place for at least 3 weeks and will certainly reduce demand for oil in the most populous state of the U.S. In Germany, the region of Bavaria announced stricter lockdown measures until January 5. Bavaria is expected to relax some measures for Christmas but keep them in place for New Year celebrations. The second wave of the virus continues to put serious pressure on the oil market, but OPEC Plus will still increase oil production by 500,000 barrels in January 2021 as the group's members want to boost their revenues. At this point, the market believes that OPEC Plus maintained its ability to reach compromise during challenging times. Most likely, oil will remain very sensitive to any indications of increased tensions between OPEC measures. While OPEC managed to calm these tensions during recent negotiations, the continued increase of Libya's oil production and a potential increase of Iran's exports in case of softer U.S. policy on the country under Biden may present a very serious challenge for the group. The recent Baker Hughes rig count report indicated that the number of U.S. rigs drilling for oil increased by 5 to 246. The number of working oil rigs is moving higher, which is not surprising given the latest developments in the oil market. Higher prices push producers to drill more in order to boost their revenues. Before the recent upside move in the oil market, EIA expected that U.S. domestic oil production will not be able to get far away from the 11 million barrels per day mark. However, the recent increase in the price of oil puts such forecasts under a big question. A combination of higher production levels and soft demand may boost inventories and put some pressure on prices. However, it should be noted that vaccine optimism remains strong, so oil maintains decent chances to get to the $50 level even if the near-term fundamental situation remains challenging.